Okay, here we are with the second half of types of businesses. We're looking at private limited and public limited companies today. Hopefully, by the end of this, combined with last week's video, you'll be able to understand what a company is and the concept of limited liability, as well as then choose between sole traders, partnerships, private and public limited companies. So, we'll start off then with companies. We can tell if a business is a company because it will have LTD or PLC after their name. So for example, Tesco's is Tesco's PLC. The abbreviation tells customers that that business is incorporated, owned by shareholders, and has limited liability. And you'll recognise some of those terms from last time round, except we had unincorporated and unlimited liability. So remember that for when we come to those. Okay, so the owners of a company are called shareholders, and they invest in the shares of the business. That means they buy little bits of the business. It's traded on the stock exchange, and the more shares they own, the more of the business they own. Now, the people who run the business are the board of directors and the managing director. They make all of the decisions of how that business is run, but they may not necessarily be the shareholders of the business. Some of them will own shares, but we often call this a divorce of ownership and control, because what that means is the owners of the business and the people controlling the business may not be the same people. Now, regardless of that, the board of directors are chosen by the shareholders, so they represent what they want them to do, and they do this at the AGM. That stands for the annual general meeting, and once a year the company must hold an AGM and invite its shareholders, who will then come along and vote for who they want to run the company. Okay, so incorporation. As I said, we spoke about this in lesson last time. Unincorporated for sole traders and partnerships. Companies, though, are incorporated. And incorporation is the legal process of becoming a company. If you want to set up a company, you need to apply to Companies House, who will eventually issue you a certificate of incorporation, which allows you to trade and gives you limited liability. Okay? It's almost, if you think of it like a birth certificate, it's the birth certificate for this company, and incorporation makes that company a separate entity. The owners and the company are not the same thing, which is what happened with sole traders and partnerships. So, limited liability is the opposite to unlimited liability that we dealt with last lesson. So, both private and public limited companies have limited liability. It means that the owners are only liable for the money invested in the business. So, if a company becomes insolvent, then the company will be liquidated or sold off, and if there's not enough money to meet the debts, the owner's possessions are not taken. So, a shareholder only risks the money they paid for their shares in the business. If the business then goes bankrupt, then all that happens is they lose that initial investment. Anyone who's owed money by the business and is not paid off, then they lose out. It's not the owners. So, the difference between the two then, a private limited company is slightly smaller of the two. Okay, and we know a private limited company because that has the LTD after its name. Okay. Now, a private limited company can only sell shares to friends and family. They don't operate on the stock exchange. All shareholders have to be approved by the other shareholders. They still have to set up in the same way, so they still have to apply to Companies House, and they have to submit their accounts to Companies House. But they don't have to publish their accounts for the general public. But they do have to be registered at Companies House and submitted every year. Now, a public limited company is the largest type of business. Okay? Public limited companies have the PLC after their names. Now, you're going to have to just learn that, I'm afraid. Obviously, public limited companies is a little bit easier because it's PLC. Private limited companies is just the LTD. Now, a public limited company must have more than £50,000 worth of share capital. So there must be more than 50 grand invested in that business when it starts. It also has to have more than 2 shareholders, and it has to have at least 2 directors. But of course, this is a big business, so chances are it will have more than that. Now, it is public limited companies that sell their shares on the stock exchange in London. We can see how much shares are. We can go onto the London Stock Exchange website and we can see in real time how stocks and shares are changing depending on how valuable they are. And the more successful a business is, the higher its share price is. Okay? So, public and private limited companies are the last 2 legal forms of business. All businesses can be classified into one of the 4 legal forms: sole traders, partnerships, private limited companies, and public limited companies. As we come to talk about other things, including multinational corporations in a moment, they will be one of those types of businesses, and a multinational will probably be a PLC. Okay, so when we start talking about different types of businesses, there can only be 4 legal forms of business, and they're all classified into those areas. Okay, now as I promised, we're going to tack multinational corporations and public corporations onto the end of this, and then you're going to have a week off from watching videos while I mark your books. So, here you need to be able to understand what multinational and a public corporation is and why they operate, and then again hopefully in the lesson we'll be able to discuss the benefits and drawbacks of these types of firms. So a multinational corporation, it's really easy definition here. A multinational corporation is a very large, usually public limited company, PLC, and here's the key thing: it operates in 2 or more countries around the world. It's as simple as that. You are a multinational company the minute you operate in 2 or more businesses, because you're in 2 or more countries. You are multinational. Straightforward, really. Public corporations, slightly different. These are businesses that are owned by the government. Okay, they're run like businesses, and some of them even charge for their services. But if they make any profit, it goes back to the government, who are the owners. Now, there are not that many public corporations. The government got rid of a lot over the last 20 or 30 years. But things like the post office, okay, they charge you to send letters through stamps, and that profit, once it's paid in the post office, goes back to the government. Now, this brings us on to an important distinction: the difference between the public and the private sector. The legal forms of businesses, sole traders, partnerships, private limited companies and public limited companies, are all in the private sector. The public sector is run by the government. Okay, so it's owned and run by the government, and it includes the public corporations, the businesses owned by the government, and public services. So the BBC is a public corporation, a business. The army is a public service. The post office is a business, whereas the police and the NHS are public services. They're all run by the government. The BBC and the post office are run like businesses. The army, the police and the NHS are run to like a business, but they don't charge for their services. The BBC and the post office do. The private sector, I keep saying it, are sole proprietors, partnerships, private limited companies and PLCs. They're all run by private individuals, and they're run for a profit. So you can see here are lots and lots of businesses. I've only got a few here, but obviously all of the different types of businesses that are all run by individuals. They're all run for a profit, and they're all there to earn that profit either for their owners or their shareholders. Okay, so as before, you know the drill. Don't forget, you need to go back and make notes on this video and make sure that you're happy with everything that you've got. If you've got any questions, write them down. And again, it would be nice to have at least one question, even if it's just asked for an explanation. And then you need to go to zondel.com, log in and complete the limited liability quiz. Okay, I've left the sole traders and partnerships still on your account, and I've added this one to it. There isn't a multinationals quiz or a public corporation. You saw it was only a couple of slides, so there is just one quiz to do. And I will see you at our next lesson. Thank you for listening.